Good morning all and welcome to today's video. So today I have four pairs on watch and those are Kiwi dollar, pound Swiss, pound Kiwi and dollar Swiss. So my favorite of the bunch, which I'm going to break down for you now, is Kiwi dollar, and I'm going to have to run through these fairly quickly because of the amount of pairs that I have on watch. So why am I looking at Kiwi dollar? I am looking at Kiwi dollar because on the higher time frames, the narrative as I see it that we have this move down here. You can see that we've moved down below this high here by way of an impulse correction continuation, which is the natural ebb and flow of the market. Yes, we have a near miss here to this high here, but you can see that we are clearly in a state of continuation because we have this impulse correction continuation. You can see the structure here. We have this 1, 2, 3. Okay, this is just a bit of a wick. We have the 1, 2, 3. We break above, catch people the wrong side of the market, and then impulse to the downside. We move above, we break above this high where there was volume accumulated here. Okay, so we have this accumulation of volume there. We break above, catch people the wrong side of the market, and move to the downside. You can clearly see that we're in a state of continuation. So although we have these near misses here, a kind of a near miss to here, a near miss to here, and a near miss to here, these don't have to be filled straight away. So because we're in a state of continuation, I'm under the impression that we'll likely take out these lows, more likely these lows here, before we move to the upside to potentially take out these highs and these near misses, and then we would have that kind of structure here. Okay, so that is the thinking there, and we also have to remember as well that we have a near miss down here to this low where there was a very sharp exchange of liquidity. Okay, the sharp exchanges of liquidity are typically what the market gravitates towards more so than the more flatter ones, the more blunter ones. Okay, you can see here that we're coming up to fill this bullish wick as well, so that gives me a clue that this is the area of value where I have this marked up as AOV. If I just drill down a little bit, you can see that we do have to factor in the positioning of the DXY. If the dollar heads one direction, we may actually only head down to this low and then reverse from there. So that is a factor in my thinking. But even a move just down to this low would be more than sufficient for us to capitalize on some profit potential. You can see here this sharp move up followed by the sharp move down. What happens? We near miss to that area. We scoot back up. We have this kind of 1, 2, 3 move, which looks like it's lining up with this sharp exchange of liquidity where we could be looking for a move to the downside. Okay, I like the fact that we're well and truly below all of this consolidation here. So what I'll be looking for from this pair today is the following. So this seems to be the area that we're near missing to, which gives me the indication that this is the area of value. So what I will be looking for, quite simply, is I'll be looking for a tap into this area. Okay, I did have an alert on there literally just before I started this video, but it's disappeared. There we go. Put it back on the charts. So what I'll be looking for is I'll be looking for a tap into this area of value. Okay, you can see we're running out of momentum in that area. That's another good clue. I'll be looking for a tap into this area, and then I'll be looking for a solid 1 hour push down to indicate that we've tapped out all the liquidity that was there. A push down on the 1 hour chart, followed by a 15-minute correction. So once we start to correct on the 1 hour, I will drop down to the 15-minute chart to look for 6 to 8 corrective 15-minute candles. And then once we get that, I will set an entry on the break if we get it. And I will also drop down to the 5-minute chart to see if the 15-minute consolidation is structured. And if it is, then I will place a risk entry within the flag. And I will if we get the entry from the top, and then I will cancel the original order. And then even just down to this first target there, we have something in the region of 4 to 5% profit potential to work with. And down to the low of the structure, 7%. As I say, because of the positioning of the DXY, the dollar index, we may not push all the way down to these higher time frame lows, but even just down to that low, there is more than enough profit potential to be made. So that is Kiwi dollar. Just the entry looks cleaner on this one than on the other pairs that I have on watch. So that is Kiwi dollar. So pound Swiss, if we just zoom out, this is more in alignment with the what the DXY is doing, as is dollar Swiss, which is kind of moves in alignment with the DXY. Looks very similar. So pound Swiss, we have this kind of impulse correction continuation to potentially give us a move to the upside. As I said in yesterday's video, if we just drill down, we have this sharp move here, sharp move down, followed by the sharp move up. We have this 1, 2, 3. Do excuse that drawing. That 1, 2, 3 structure there. We have the 1, 2, 3. The near miss to this sharp hook point. We come down, we tap into it, catch people the wrong side of the market, move to the upside. But then we don't follow the natural ebb and flow of the market. We don't get that impulse correction continuation. Instead, what happens is we come back down, we scoot back down to take out this low again and take out the liquidity that was there before moving to the upside. And the clue that we would likely do that, as I said in yesterday's video, is the fact that we had this near miss to this high, and then we finally take out the near miss and the high that we near missed to, and then we had that impulse correction continuation. So when we got this, the impulse down followed by this 1, 2, 3, that was the market showing its hand that this impulse correction continuation was not going to commit to the upside, and that we were likely coming all the way back down to test these lows, which is exactly what happened. Okay, we then tapped into that low. People think it's now going short, so they, once it breaks below, they think this is now resistance. They may have made some profit potential here, but as I've said previously, if you keep selling the lows and buying the highs, which is what most amateurs do, then you're not going to be profitable. So they start selling, it completely washes them out, and we break to the upside. Okay, so I'm just at this moment in time, we have pulled back. We do have to consider that on the weekly chart, we have now pulled back. If I just measure this, we've pulled back more than 50% of the length for this candle. However, we haven't pulled back more than 50% of the length for this move. So this, I'm just seeing this at the moment as an impulse correction continuation. You can see that this weekly candle and this weekly candle, as it stands provisionally, is moving down more slowly than this candle moved up. So that gives me a clue that we could be moving to the upside. However, you can't deny that we are getting some momentum to the downside now. So, this is why we don't have to be right as traders. We don't have to know what's going to happen next to make money. We just have to know what we're going to do, and we just let the market show its hand rather than trying to guess. Okay, so one of the reasons this is lower down on the list is because we have this sequence, is this atypical sequence here. So we have a very corrective move up before we start impulsing to the upside. And one of the reasons that made me put this on watch is because we have this kind of near miss to here, and this near misses to here, and I was just seeing this as a potential move to the upside because we had this 1, 2, 3 structure. Okay. However, what happens when we tapped into this area of value here, where there was a sharp move down followed by a sharp move up, price didn't commit. Okay. So I'm not entirely convinced at this moment in time that this entry, which I'm looking for, is going to shape up. We tap below these lows, and this is where I would have anticipated, if we were going to move to the upside, those impulses, corrections, and continuations from there. Now, we didn't do that. Now, we could be scooping down as we did on the higher time frames, because price action is always repeating itself. We could be just scooping back down to collect more orders before we push to the upside. Okay, that's a possibility, and that's what I will be looking for today. But if we just drop out below here, then I'm just going to take this off of watch. I'm not going to try and guess what the market is actually doing. But at this moment in time, what I'll be looking for is price to impulse back above this high, because this is a fairly steep structure, and we do have to remember that this could be, given what price has done, if I was to just try and look to get long with a flag in here, then I could be tagged in and tagged out, and price could form something like this, like a larger bear flag to push lower. Okay, so I'm not going to try and get trapped. I'm not going to try and trap myself in that, because I've seen that too many times. But if we broke above here, that would negate the possibility that this is, some kind of bear flag to push lower. Okay, and we'd also be trading back above this low here. And on the 4-hour chart, I think that would look very convincing for a move to the upside, okay, for the reasons previously expressed. So what I'll be looking for is a 1-hour push up above this. At this moment in time, it doesn't look that likely, but a 1-hour push up above this high here, which would leave us above here as well, followed by that 15-minute continuation, and then potentially that 5-minute risk entry within the flag, and then I would be able to manage the trade up to even this high for about 3%, and then up to the start of the structure for something in the region of 4.5 to 5%. I have an alert set just below the area of interest rather. And if that does not trigger, then I will not be looking to place a trade. So pound Swiss, okay, pound Swiss on the higher, pound Kiwi rather, on the higher time frames. So you can see here that we have this. I'm just seeing this as a potential at this moment in time because we have this 1, 2, 3 touch structure there. I'm seeing this as an impulse correction continuation to take out this high, which this high, this wick, and this high near miss too. Okay, and if we just measure that, where would that take us? So even if we measure this impulse here, if we measure that impulse correction continuation, that would take us up to this area. So that makes sense as well. Okay, you can see some very bullish follow through on the weekly chart. We are dropping out. I am mindful of that, but we have a near miss here, just as we do on the higher time frames there on the weekly chart. We have a near miss to this high, which near missed there as well. So that gives me a clue that we're potentially heading higher. It looks bearish at the minute, but we shall see what happens. You can see that we have this 1, 2, 3 move here. We have this. If I can get that paintbrush on the chart, it doesn't seem to want to. There we go. Right, we have this kind of structure here. Okay, so I'm just seeing this as an impulse correction continuation to tap into the base of this for that potential move to the upside. And if we just measure the lengths of the impulses and corrections within this, there we go, because the impulse correction, the continuation leg out of an impulse correction continuation tends to be of a similar length. That takes us down to here where we are at the moment. Okay, I'm just seeing this 4-hour, these bullish. I've seen these so many times. These bearish 4 hours, the wicks below them often get filled before we move to the upside. That may be what's happening now. So what I'll be looking for from this pair, you can see that these lows keep near missing to here, which gives me a clue that this is the area of value. Okay, we near miss again. We have this bullish, this bearish 4-hour candle here. We come back down, fill the wick of that, tap into the area. So what I'll be looking for from this pair, quite simply, is the following. I'll be looking for price to tap into this area, which it now has. And what I'm looking for now is I've got an alert set just above the area of value because I'm looking for a subsequent push up on the 1 hour, once again, followed by that 15-minute continuation as a minimum, and potentially that 5-minute risk entry within the flag. And then I'll be able to manage it up to this high as a first target, or even just to here. I'll be able to manage it. But here as a solid first target for something in the region of 4 to 5%. So I'm going to just let this do its thing. If it just drops out, then I'm happy to leave this alone. And if we do break back into the area of value, then I'll be looking for these entries that are forecasted. So that is pound Kiwi. So moving on to the last of the pairs, which is dollar Swiss. So let's just break this down. So this moves very much in alignment with the DXY. Okay, if we just flip to the DXY, the dollar index, you can see that there's similarities between how they move. Okay, but on this one, the reason I like this one is because we have this very sharp move down followed by this sharp move up. Okay, giving me a clue that this is where the liquidity was sat. We then tap into that area by way of this 1, 2, 3 touch structure with a middle section. Okay, and then we we tap into the area, we near miss to it here. What happens? We come back down. We tap into this high here where there was a sharp move up followed by a sharp move down. We break above, catch people the wrong side of the market, tap into the area, break just below, and then we move aggressively to the upside. Okay, so I'm just seeing this as a potential impulse correction continuation to take us up to here as a solid higher time frame target. You can see that we have the impulse correction continuation. So just seeing this as a further impulse correction continuation to take us to the upside. You can see that we're moving down correctively. Okay, so we have this base here, this area of volume. We come back down. We do tap into that area, but we don't break below it. We come back down. We tap into it again, but again we don't break below it. So I'm under the impression that there's likely liquidity sat just below there, that we likely tap into before we move to the upside. Okay, we also have that little low there which we may tap into. If we just measure this and assume that this is an impulse correction continuation, okay, we may push a little bit lower, okay, which may take us into that area. Okay, so I'm mindful of that as well. So that is why on this pair specifically, because we've already tapped into the area and price did not find enough liquidity to send it to the upside, in this instance I will be waiting specifically for a break below, okay, not just to tap in. Notice that we have this may be we may be getting this little ending structure, just cutting through that wick actually. There you go. And when we see these little tight flags just above an area of value, or what is potentially an area of value, that also indicates that this may be a break below, a push back in, and then we end up with that mini inverse head and shoulders pattern. I've seen these so many times, these little tight consolidations above an area of value, which typically cause these inverse head and shoulders patterns to happen. So with that in mind, what I'll be looking for from this pair is, specifically in this instance, I won't be looking for just a tap in. I'll be looking for a break below, which would likely help us to tap into this little exchange of liquidity there, and tap out any orders that are sat just below here that price keeps missing because it taps into it and doesn't actually break below. And then once again, I will look for that push back up, followed by that 15-minute continuation. And then once again, I would look to see if I could filter this on the 5-minute chart if that 15-minute consolidation was structured. And then as a first target, even just down to here, even up to here, I could manage this just about as a solid second target there, 3.99 to the top of the structure, 6.88. And then, of course, if we took out that high, that target there, then there's obviously some decent profit potential to be made, okay? And that's where I would use the mechanical management system, and I would measure from here to here. I would set a take profit at the 90% mark, which is where price typically pulls back sharply. Okay, and then I would also simultaneously trail my stops at the same time, which is what simultaneously means. Thanks for watching, folks. I hope you've enjoyed this video. I've had to go through it a little bit more quickly than I would have liked, just because I've got a lot to do today. I'm not going to elaborate on that, but things I've got to do in my personal life that are very, very important, okay, away from trading. And that is what I'm going to be looking for. So thanks for watching, folks. I will be back tomorrow, most likely with another video if I have pairs and watch. And if I place a trade, then I will obviously bring you a recap on that trade, how it went or how it's going. But for now, have a great day, and I'll speak to you again soon. Thanks for watching.